Today is yet another strong day for most of those commodities. It actually has been the year of precious metals, the way it has started, with gold prices up nearly 5%, and you have seen the silver prices gain up more than 8% in 2012. It has been trading above those important moving day averages as well, and that really brings in the charts on the positive territory. Ditto is the case with the base metal prices also. Copper is trading around 6-week highs, and we have seen that strong rebound come in case of nickel prices as well. Let's go across then to Anurag Kataria. He is Business Head ITI Investor Services, and he joins us in Mumbai. Anurag, hi, welcome to the show. Let's start with gold first, and breaking off 1640 and staying above that. What does that mean on charts, and how are you playing it?
Yeah, absolutely. What we are looking into gold is basically a choppy kind of a session wherein year closed with an bearish trend, and by the time it opened again, the US market started participating. It has been a relentless buying opportunity. Some of the data which have supported gold, like physical demand coming in from China and India, both ends. I think $1635 was a major resistance for gold, and which it has broken. We would be still cautiously long on the gold till the level of $1665, $1670. Only dampening factor in this entire scenario had been the rupee appreciation, which is again not reflecting on the gold prices on domestic front, which is pretty ironic. Whenever market felt, rupee was at a depreciation high, and when the market is bouncing back, I think it is appreciating. So that somewhere the price reflection is not there, but dollar-wise we are looking at, in dollar terms, we are looking at $1665 to $1670 kind of scenario.
How about the silver prices? Because we are holding around $30 an ounce. Are you looking at much more gains from here?
What we are looking into is choppy kind of a session wherein we are stuck into the range across the bullion markets, and we are still not able to make up our mind. It's basically a tug of war between bulls and bears. By the time market settles down or gives a clear direction, we would be more comfortable. The interesting fact is the volumes are less than 50% compared to where the year ended last time. So currently volumes are not supporting the kind of prices which are there. That means that market is not clear on the direction. On silver front, we are again would like to buy silver around 52,500, 600 for a target of 53,500 to 700 on the MCX front. Probably on dollar terms, we are not looking beyond 3150. We would like to take shorter calls on the markets as of now.
How about the crude prices? Because while they have been holding above that $100 mark, it's off those 1-month highs that we saw crude trading in the previous week. How are you trading the crude prices now?
To be very honest, geopolitical situation has not changed much. Only the case is the news flows have reduced, and that is what is reflecting on the prices itself. By the time crude settles down, I feel technicals should be followed rather than fundamentals. Till the time it is holding above $101, we are comfortable buying with a tight stop loss of $99. On rupee front, we are looking at a stop loss of around 5,200 and a price target of 5,350. That is a shorter kind of a call we want to take on the market. We don't want to bet big. We want to preserve our cash, whatever we have in hand, and take our small bets on the markets.
How about the natural gas prices? Because in the recent, the last quarter of 2011, we saw a run up into that one, but that really has stopped as of now. Are you started selling into that?
Yeah, even on the gas front, it has been a lackluster year for the last entire, 10-11. Only in the last quarter, gas prices started, moving or showing signs of volatility. As of now, we are not very clear on the trend. Probably whatever rally which has happened, we might expect a cut of around 3 to 4%. So we would like to remain short on natural gas. But again, as I've mentioned, we'll have to keep a tight stop loss. I think before February, we would not be able to make up mind as in singular direction on the market. Till the time we want to play on the waves, and that's about it.
Anurag, how is the base metal space looking to you? Because previous week was kind of steady. This week we have seen an uptick come back in case of copper, nickel prices, especially copper trading around 6-week highs. We've seen that 7,600, 7,700 kind of marks come back into the market. The Chinese data has been on the positive side. The US data has been on the encouraging side. Do you think that's reason enough to start buying into this space?
Yeah, this is what the key is on copper. Copper is called as in king for the base metal, and that is a clear indication whatever happened last week. It was a surprising data from China. We wouldn't have expected that kind of growth in terms of copper import is concerned, but that has happened, and that is a fact. That is supported definitely to the price point. I think on LME front, we are looking for a price target of around $8,200 to $8,400. That is the level we would like to go with the copper. On domestic front, I think it can cross to 412 to 18. But again, 412 to 18 is in resistance zone. So we would like to watch out for that. But as of now, we would be long on the market with the stop loss of 406 rupees.
Not just the non-ferrous metals, because most of those ferrous metals also had declined in 2011. You had the iron ore prices falling by 20%. Steel prices also hadn't done so well. As we start into this year, what kind of a movement are you expecting there, and how does that work out for nickel prices then?
I think last year would have ended if we wouldn't have a fall in the last 2 weeks with a positive note on across base metal or probably on the bullion sector as well. But the surprising factor last year was the highest returning commodity was milk, which usually we do not track. What has happened this year, what we feel is on the ferrous metal front as well, the prices have been supporting iron ore in specific. Now whatever relaxation government has imposed another tax on exports. I think what has happened into that is basically prices have risen internationally. Those have been narrowed down. Probably nickel is something which might follow the suit of iron ore, and probably we can have another longer run on nickel coming in.